Hi traders, welcome to another edition of weekly forex forecast on FSLess, which is for 28th of September to 2nd of October year 2020. In this week, I'm gonna share with you guys the list of currency pairs I am watching out for next week, should in case of trade breakout opportunity. So if today is your first time viewing my YouTube channel, you are welcome. And then do not forget to click on the subscribe button as well. Hit on the notification bell, so whenever I release educational content of this kind, you're gonna be the first to be notified. Also, remember, forex trading is an high risk investment as well as high reward investment. So do not risk more than the money you cannot afford to lose. And then do not trade with a borrowed money. Here are the list of currency pairs I am watching out for next coming week. I have the British pound sterling paired against the USD. I have the euro paired against the USD. I have the USD paired against the Canadian dollar. I have the Australian dollar paired against the USD. And then we're going to wrap up things with the XAU paired against the USD or the gold. So let's dive into the weekly forex forecast right now. The first currency pairs on our watch list is the British pound sterling paired against the USD. In the last weekly forex forecast, I discussed about the retest we had right here, and then I said this retest has high probability to influence the pairs in order to put the trend downward on the British pound sterling against the USD. So let's zoom in on these currency pairs. Zooming in on these currency pairs, we can see how last week did made a bearish reversal, and then the bear successfully ensured a daily close below the key level support, which acts at the price level of the 1.27487, which was a rejection structure right there as well, right here, a resistance structure. And then we can see how Friday bar failed to ensure a daily close above this support key level structure. So next week we have to pay close attention to this key level structure of the 1.27487 to see how price is gonna react to this key level structure. So next week, if the bulls should step in at this key level structure right here, whereby they ensure a daily close above this key level structure, then it's a signal the bulls are still willing to reverse this trend in an upward bullish rally. Alternatively, next week, if the bears should put price below these rejections of bars right here, whereby they ensure a daily close below this doji structure right here, then it's a signal the bears are willing to pull price downward to the next key level support, which acts at the price level of the 1.25084. So let's check on the monthly chart frame so we can have a better understanding of this currency pairs. Here comes the monthly chart frame of the British pound sterling against the USD. We can see here comes the September bar, and then here comes the August bar. We can see the month of September is gradually ensuring a bearish engulfing bar to the month of October. So don't be surprised if the month of September gradually successfully ensured a bearish engulfing month to the month of August. Then it's a signal the bears are willing to take over this trend next coming month, that is the month of October. And then don't be surprised if the bears take over the British pound sterling against the USD for the remaining year of the year 2020. And we can tag this structure right here as a first breakout of the multi-year dynamic resistance trend line. So next week on the daily chart frame of the British pound sterling, pay close attention to the key level structure of the 1.27487 to see maybe it's gonna be a bullish close above this key level structure, or maybe a bearish close in order to anticipate for a more bearish downward rally to the key level structure of the 1.25084. The next currency pairs on our watch list is the euro paired against the USD. Congratulations to all the entire VIP members. Last week we short a lot of currency pairs, but I wasn't much interested to short or to buy the euro paired against the USD. The reason why I don't want to short the euro paired against the USD, I'm going to show you guys based on the higher time frame. We can see the euro USD ensure a daily close below the key level structure of the 1.17098, which was a support for this rejection swings right here. And the reason why I don't want to short this currency pairs is right on the monthly chart frame, but we can as well see the image on the weekly chart frame. So on the weekly chart frame right here, I'm gonna zoom in. Here comes the weekly chart frame. frame of the euro paired against the USD. Let's zoom in so you can see the picture properly. You can see right from the swing high right here, low high right here, we got a rejection structure right here, a low high right here, a resistance structure. This was in year 2017, and the right here in 2013, and then right here price broke out. This is actually in the year 2020. So let's zoom in on this currency pairs. We can see price broke the multi-year dynamic trend line right here, and this is then we got a series of choppy market right here. So those who are trying to short the euro paired against the USD, they have to be very, very careful, because price is actually approaching a multi-year dynamic key level structure right here. That is a dynamic trend line right here, and there's high tendency for the bears to have hindrance there in order to penetrate downward to the next key level structure, which acts at the price level of the 1.14537. So before I can actually anticipate to short the euro paired against the USD, I want to see if we can see a well-defined close of bar below this multi-year dynamic trend line right there, and that would be a weekly close. So that is a major reason why I don't want to short the euro paired against the USD, and then I diverted my trading activity to other currency pairs. So next week I'm gonna patiently keep on watching the euro USD to see maybe the bears are gonna ensure a close to the key level structure of the 1.14537. So next week pay close attention to this key level structure of the 1.14537, and then the key level resistance, which acts at the price level of the 1.17098. And then do not forget, based on the weekly chart frame, price is approaching a multi-year dynamic resistance trend line, and then there is high probability for this dynamic trend line to turn into a dynamic support for the bulls in order to anticipate for a bullish upward rally. But the bulls have to ensure a daily close above the key resistance structure, which acts at the price level of the 1.17098. Also, do not forget, on the monthly chart frame of the euro paired against the USD, it's currently turning into a bearish engulfing month for the month of August right here. So check this out on the monthly chart frame of the euro USD. The next currency pairs on our watch list is the USD paired against the Canadian dollar. We can see right on this currency pairs, if I should zoom out a little bit, you can see we got a series of support structure right here. We got a support right here, a resistance right here. We got a support right here, and then price broke this key level structure of the 1.33213 last week. In this week, that was on Monday or Tuesday, I gave out trading signal live on my YouTube channel. The video is still right there. You can search my videos on my YouTube channel. I gave out a trading signals on this currency pairs, USD paired against the Canadian dollar, USD paired against the USD switch. A lot of currency pairs I gave analysis about, and they all played out well. So next week I'm still paying close attention to the USD paired against the Canadian dollar. So let's zoom in on this currency pairs. Next week, the next key level structure we have to look up to is the resistance key level structure, which acts at the price level of the 1.35033, which was a support for this currency pairs right here. That was in June 2020, and the right here in July 2020. And then alternatively, if the bulls fail to put price upward next week, then the bulls have to do all what they can to defend this key level structure, which acts at the price level of the 1.33213, which should serve as a support. And then we can see it as a rejection right here before price broke out right here, and then we got it at the support right there, at the support right here. So the bulls have to do all what they can to defend this key level support next week. So if the bulls fail to defend this key level structure next week, don't be surprised. The currency pairs of the USD paired against the Canadian dollar has high probability to transform into a more bearish downward trend. But before they can actually transform into a more bearish downward trend, they have to clear off this minor key level structure, which acts at the price level that is the midpoint of the 1.32690 / 1.31990. So next week I'm still monitoring the USD paired against the Canadian dollar. If we can see, we can add to our trading position. I already updated this trading profit for this currency pairs. The next currency pairs on our watch list is the Australian dollar paired against the USD. We can see right here on this currency pairs, right from the swing low right here, we got it right here. We got a series of upward bullish rally, and we can see how price transformed through this rising bullish channel right here. And then let's zoom in on these currency pairs. Okay, we can see there was a reduction of bullish momentum right here, and then price carved another rising bullish channel in a bigger rising bullish channel. We can see how price did broke out, and then price broke out of the minor support level structure with a well decisive bearish bar. At the moment right now, price is finding it difficult to close below the key level structure of the 0.70308. Can see this is support, likewise a resistance, rejection right here, and then a resistance structure right here. So next week, the Australian dollar paired against the USD is one of the currency pairs you have to pay close attention to. It did close below this key level support right here, has high probability to transform this currency pairs to the next key level structure. But before we can actually get to the key level support, which acts at the price level of the 0.66711, you have to watch out for this swing low right here, and this swing low acts at the price level of the 0.68000. Alternatively, next week, if the bulls should step in whereby they ensure a daily close back right here, they still have to clear off the minor key level structure, which acts at the midpoint of this 0.72000/0.7100. So next week, pay close attention to this currency pairs of the Australian dollar paired against the USD. It's time to wrap up our analysis with the XAU paired against the USD or the gold. Here on the daily chart frame of the gold, we can see the rally on the gold. It's known bullish rally. We can see the depreciation of bullish momentum right since when price cover a low high swings right here, likewise a low high right here, a low high right here. So let's zoom in on the chart of the gold. Right here we got a symmetrical triangle, see that, and then price ensured a daily close below the symmetrical triangle, and then the support which we got right here, price ensured a daily close. And then if I choose zoom out a little bit on the gold, we can see right from the swing low right here, we track the swing low right here, and then high low right here. We can see this dynamic trend line aligns to this point right here, and then we can see how last week price action right here was being held by the dynamic support trend line right here. So next week we have to pay close attention to the gold, and then we have to monitor the key level structure, which acts at the price level of the 1902.08, and then the dynamic structure right here, and then the next key level support at the price level of 1796.26. So gold is still under the influence of the bulls on a long-term run. And then right here, we can tag this upward movement as an impulsive wave, and the bearish move right here as a corrective wave, and the next upward move right here as an impulsive wave, and the next current bearish move right here as a corrective wave. Not until we can see a daily close below this dynamic support trend line right here before we can actually figure out maybe the bears are willing to put price downward to the next key level structure, which acts at the price level of the 1796.26. So next week, watch out for price action. Maybe the bulls are going to put up price, and then if the bulls should step in whereby they ensure a daily close above this key level structure of the 1902.08, then it's a signal the bulls are resuming the previous bullish aggressive trend right here in order to anticipate for a more bullish upward rally. This is the 2075.08, but take note of the series of the swings high we got at the price level of the 1980.00. So there's high tendency for this key level structure of the 1980.00 to act as a medium of hindrance for the bulls in order to anticipate for a more bullish upward rally. So next week, pay close attention to the gold. Okay guys, this is all I have for you in this weekly Forex forecast, and then make sure any trade you want to execute next week, you implement the right risk reward ratio management system. If you haven't joined my free Forex trading class, 3 times in a week I do hold free Forex trading webinar. click on the link at the bottom of this video so you can get access to that class. In this class, you have access to ask me questions directly. And then if you are looking out for reliable VIP membership room, whereby you can get trading signals from me, what I do in the market, how I execute my trade, there's as well a link at the bottom of this video. Check on that link so you can become a VIP member today, so you can get access to quality trading signals from me every day, every week. So make sure as well you have a trading rules which can guide your trading activity in the market. And then do not forget to like, share, comment, subscribe to this YouTube channel for more educational content of this kind. Do have a wonderful weekend. Peace.